This is the Friday, January 19th, 2018 version of the Market Plus segment. Joining us now, Darin Newsom. And again, a popular man when it comes to questions. We've got 2 pages again. Thank you to everybody via our Twitter page at Market to Market. You can find at Darin Newsom. And I know a lot of you have asked you these questions, but we're going to start with a Facebook question first. This is Chris in Wisconsin, Darin. And he is asking, with large supplies and stocks in all agricultural commodities, what are the reasons we could see prices move higher or lower in 2018?
The lower is easy. Oversupply, questionable demand. The higher is more difficult. The higher could be helped by the weaker U.S. dollar. If it continues to crumble, that's going to make our supplies look better on the export stage. And then if there's some sort of weather issue this spring or summer, both of those are kind of a long shot. Right now, much easier to paint a picture of markets going lower long term.
The thing always is weather, right? Mm-hmm. Isn't that what you always say is kind of the big question mark? When you're set up dry, we're much drier this winter than we were last year at this time. So the conditions are warming up for that. Is that what you see by weather issues?
I think it's going to have to be proven. So it may be a year from now, because I think the markets are going to have a hard time buying into hype about, it's hot and dry. What did we see last week? I mean, does anyone believe the yield numbers that came out in USDA's final, quote unquote, final report? They were astronomical. And that was after the type of weather we had last summer. So I think it's going to be very difficult to actually establish a weather market. We'll see it in the spreads, we'll see it in basis, but it may not be until next January when we actually see the numbers.
Show me the numbers, and even then you won't believe them.
Right, exactly.
Paul in Minnesota, also a Facebook question, IPTV Market. If you haven't liked us, by the way, what are you waiting for? It's a good opportunity to join in some conversation, see some fun videos. Paul in Minnesota is asking, are we going to see more than 2 days worth of pricing opportunity for corn, unlike we had in 2017? Any rally was short last year.
Yeah.
Do we see? Part of that is when you've not had an opportunity to sell, you sell in a hurry. Mm-hmm. And then all of a sudden you're like, well, I don't need to sell anymore. The market stops with its sell signal.
Well, I hope we get 2 days.
It's an increase. It's a doubling.
I would not be surprised if we see the same sort of quick spike rally. Again, based on some sort of weather forecast or something, 5 to 10 days of hot, dry weather. But I don't think it's going to go very high. And again, I don't think it's going to last very long. So maybe it's 2 days, maybe it's 3. But I'm going to say it's going to be very similar to what we saw in 17, 16, even 15. Yeah. I think it's going to be about the same scenario. You
got to be dialed in a hurry. All right, Ben in Jessup, Iowa, that's Buchanan County, where you were earlier today. You didn't drive by and wave at Ben or my mother. Thank you for that. Ben wants to know, financial flows matter. 10 years ago, he remembers a guy named Darin Newsom citing a plus 90% correlation between the equity market and the grains. Does this offer you any glimmer of hope?
No, it doesn't. Things have changed. What we have now, I'm not going to say it's a more intelligent fund mechanism in the market, but it's evolved. The funds right now are looking for markets with some sort of supply and demand reason to buy, some sort of fundamental reason, either existing or the potential for. And so that's why we've seen the livestock sector jump. We've seen the energy market the energy sector go crazy. Everything's done this except for grains, with the exclusion of Minneapolis spring wheat last summer. So unless, again, we see some sort of fundamental change, all of this money that's being made in the equities, all of this, this strong rally that we've seen going on in the stock markets and so on, I don't see it coming over into the grains. Something's going to have to change fundamentally. It's going to have to give some sort of fundamental reason for fund money to come back into the grains. Other than that, they're just going to continue to sit.
Or we stop going up 26,000, 27,000. We start going down and people look for places to put their money.
That's possible.
Possible.
Still probably won't likely come over to grains if there's no reason to do it. And the thing about the Dow, it's going to come down at some point.
It has to.
But it just goes up over time. I mean, this rally actually dates back to, I believe it's March 2009. It's just that it's accelerating right now. At some point, everything runs out of gas, sooner or later. So the Dow will fall down. Will that money go over into grains? Not if there's no fundamental reason.
Phil in Dresden, Ontario, Canada. You've heard of the guy. He's at Agrodome. He wants to know, and this is similar to what we were just discussing, lower highs over the last few years for corn doesn't bode well, but when does chaos theory happen? Are there butterflies incubating somewhere in 2018 to fundamentally change the corn market?
Sure. I mean, that's the thing that we don't know. Because it's chaos theory, we don't know when that unexpected change is going to happen. But, you know, if we try to say, okay, what are the types of changes that could occur? These unforeseen events, what could they be? They almost all line up on the bearish side. It's hard to even imagine what it's going to take to be a bullish butterfly. That'd be interesting to see as a bullish butterfly. You know, doing away or having more problems, having something come up, a trade war come up. You know, these are the types of events that we can halfway foresee. Seeing something bullish is just very difficult right now.
Okay. That's a good one from Phil. We're going to have another one from Phil right now, a follow-up. But first I have to let you know that Tim in Crookston, Minnesota says Skull Vikings. And he also had a similar question there about what's going to make 2017 a winner. But this one's back on beans with Phil. He's saying $11 November 2018 soybean futures are a world away or not. What is the scenario in 2018 which gives us that possibility? Let's talk beans specifically.
I don't really see a possibility of $11 beans. Supposedly, Brazil is raising a crop of 110 million metric tons. That's going to be coming on the market over the next 40 to 60 days. The U.S. is probably going to plant another 91 million acres of soybeans in 2018. To me, contract highs 1030. Looking at the seasonal patterns, you know, kind of excluding this week, but still looking at the seasonal patterns, it would not suggest that we're going to get up to the $11 mark in soybeans in the NOV contract. So I think if it does, that means something has changed acreage, weather-wise. Brazil didn't grow what they thought. The dollar has collapsed. Something has happened. One of those bullish butterflies has happened. Really is about the only way that we're going to see soybeans go to 11.
Something about the dollar, you know, we've talked about it's a 3-year low. And the other stat is that it is on, last year, it was a 15-year high, at 103. And its peak dollar, in 2012, the peak dollar was 75. So we have room to go down, and that usually means good news for commodities, right? But what happens when we hit 80 for a dollar?
I don't know that we can go that low. I mean, anything's possible because it's given no sign on its monthly chart that it's slowing. Right now, it's got some support in that 87, 88 range. I think we broke below 90, or we're sitting right around 90 at this point. We could continue to pull it back. I don't know that we're going to go down into the low 80s, low to mid 80s. If we do, will that be enough to bring money into commodities? It's going to support some of the commodities, you know. And if it does enough to really start picking up, increasing the export demand, yeah, that could finally provide some support to grains, but we're going to have to see it play out first.
Okay. Dustin in Andover, Iowa. This one's in the weeds here when it comes to beef. Quality Holstein steer basis is $35 to $40 below beef steers. Any relief in sight? Is that one a little too much in the weeds for you?
Yeah, it's a little out of my wheelhouse. I always hate to back away from a question, but sometimes when you get down into the very specifics of the different types of cattle markets, okay, I would hate to give him a bad answer on that.
That's
one.
All right.
Well, all my other bad answers are fine, but I'd hate to give him a bad answer.
Why stop now?
Exactly.
All right. This one, we kind of covered it in the show, but Bill in Panora, Iowa, he asks, are oats the new it crop of 2018? And oats, I guess I'm asking more on the oats, sorghum, other crops maybe getting some acres from corn and soybeans.
Theoretically, sounds good. Maybe in the northern plains you could actually see this play out. You know, the oats, and I don't think a lot more acres are going to go into grain sorghum if you look in the southern plains. I just don't see it happening. But some of those niche crops could see an increase in acres this year. I just don't see, you know, all of a sudden saying, okay, we're only going to plant 87 million acres of corn, or we're going to drop soybeans. I just don't see that happening. I could see more acres going to beans, but I don't see corn taking a big hit by any of these.
You snuck ahead and looked at one of the other questions. I'm going to go to Glenn in Byron, Ohio, and Glenn is at Glenn_newcomer in Ohio there, and let's talk a little bit about an option strategy. What's the best option strategy to protect the 2018 corn-soybean crop from now until the crop has emerged?
You know, ideally in the corn market, what you'd want to do in a situation like this, since it's just so flat, is sell a straddle or sell a strangle. But the volatility is so low. So you can go in there and you can buy a very inexpensive put option and basically just put a floor in on the corn market. That's probably about the best option play you're going to see in corn and soybeans. We're getting up to an area where, you know, if we push that 1030, that previous high, then I think you can go in, buy a put, sell a call. Use some sort of strategy, because I think you're going to see volatility jump a little bit. See what that looks like at that point. See if you can build a pretty good floor with the possibility of having a better ceiling. So that's what I would look at in beans. You have to give it a little time in here, but I think there's an opportunity down the road.
All right, last couple of questions here. We're going to go to Boyce in Montpelier, North Dakota. You'll be up in Fargo here coming up soon. He's just, if there's a shutdown, because as we sit here tonight and record, there is no government shutdown, but there is no deal yet. Will a government shutdown have any effect on commodity markets?
Could continue to push the dollar lower. And if it pushes the dollar lower, again, it's going to support some commodities. Could it support the grains? Through enough pulling of the threads, possibly. So while it's not overly bullish for anything to have a government shutdown, you know, the best thing about it might be that there's no more monthly reports for a while.
You wanted this last week.
Oh, I've wanted it for years. But you know, just from a trade point of view, if it does put another level of pressure on the dollar, then that could spark some buying interest in commodities.
Quick question. What acres do we have more of next year? Corn, soybeans, planted?
Lumber, no.
That would be a story.
No idea. You know, as I make the rounds this winter and I ask, you know, are you going to change your acres? No. Most everyone's going to stick about the same. So I think we're still going to be in that 90, 91 for both of them. This could be the year that soybeans actually see more planted acres than corn. But I think it's still, both of them are going to be more than 90. Both of them are going to be plenty.
All right, couple last questions here. You don't have to put them up on graphic, except for the second one. Farmer Farm Boy in Central Iowa wants to know, how is it possible on January 18th that the Royals free agents are still unsigned, Darin? Is this collusion in the MLB free agent marketplace? And we have another tweet that came in from this Darin in Omaha, Nebraska. He's known as @Darin Newsom. He says, there's been a lot of talk about collusion in baseball this winter. Could it be Scott Boras simply has his Royals clients priced too high, like an offer to sell corn at $6? What do you think of that guy's question?
Boy, that last guy is right on the ball.
And the
He's
reason
good.
for all these baseball things, you should know, in past MTOM podcasts, Darin and I have discussed baseball. The tease this week that was on the Facebook page was in St. Louis outside of a Cardinal baseball convention. That's something we talk about. It just helps break the monotony of $5 to 10 cent swings in the corn market.
And as we always say, there's never a bad time to talk about baseball. So
I agree. Darin Newsom, thank you so very much for your time. I appreciate it.
thanks, Paul.
All right, that will do it for this Market Plus, and you can join us again next week when we'll explore how one nonprofit agency is feeding millions with food from overlooked sources. And Sue Martin will sit across from me here at the Market to Market table. So until then, thanks for watching, listening, or reading. I'm Paul Yeager. Have a great week.